Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we are going to be doing technical analysis on the S&P 500 for Monday, March 2nd, 2020. And we will be using my stockcharts.com charting service, which I am a paid member of, and I will leave a link to their service in the description box below this video. First thing I want to point out here is we had a monster day in the market today, up 4.60% in the S&P 500, and we closed at 3090.23, so 3090.23. A very good day indeed, and you can see here this is a 5-day 10-minute chart, so each candlestick represents 10 minutes of trading in the S&P 500. So on the right-hand side of the screen here where you see my cursor moving, this is today's trading, and you can see we finished at the high of the day, which is really good news. And you can see we opened up here, we went negative for just a short period of time there, just about 10 minutes or so, 10-15 minutes. We were trading beneath this dotted blue line, which is where we would have closed on Friday, and so anything above that is positive. So for the majority of the day, we were climbing higher, pulled back a little bit into the afternoon, and then around 3 o'clock you can see that we took off, and on increasing volume, which is always what I want to see. I want to see the up movement on up volume, and that's exactly what we had today. And again, we closed at 3090.23. So a couple of important points here before we move on to the next couple of charts. First off, on Friday, you can see where my cursor is moving there. We hit an intraday low, which was 2855.84. Now, what's important about that is back in October, so I've switched to a 10-minute 5-day chart going back to October now. On October 3rd, at a little bit, probably around 10 o'clock there, on October 3rd, where you see my cursor moving kind of towards the center and then bottom of the screen, we hit an intraday low on October 3rd, 2019 of 2855.94. So again, Friday, 2855.84, and about 5 months ago, October 3rd, we hit an intraday low of 2855.94. So we undercut this low by 1/10 of 1 point. Now, technically that is a very, very positive sign, and the fact that on Friday we were able to close towards the session highs on increasing volume right before a weekend, that was positive. Today's follow-through, that's positive. The question becomes, now that we're back above the 200-day moving average, which is this gold line, we do want to hold this 200-day moving average. The next point that we need to overcome now is this 3100 line, which is going to provide overhead resistance for the S&P 500. And guys, you don't see these kind of days in the markets very often where you're up 4.60%. So to me, it's somewhat suspect. Perhaps we were due after such a bludgeoning that we had last week, but the key is, and what I'm going to be looking for is follow through. So we want to close positive for the next couple of days so we can get 3 positive days in a row. And, we want to maintain this 200-day moving average. We want to get above this 3100 level on the S&P 500, which is going to provide some overhead resistance. So if we can get above and stay above the 3100 for the next couple of days, it pretty much looks that, at least we put in a short-term bottom. There's still a lot of unknowns out there, and we don't, there's a lot of unknown unknowns. And what I mean by that is we don't know how much the coronavirus and just the fear of the coronavirus and people's reaction to the fear, how is that going to affect earnings of companies across the globe over the next quarter or two, and what might that do to stock prices in the overall stock market, both the S&P 500 and around the world. And keep in mind that 50% plus of the earnings in the S&P 500 come from outside the U.S. So these are 500 plus companies that are domiciled here in the United States that make up the S&P 500, but over half of their earnings and revenue come from outside the U.S. So we don't know the extent of the damage yet, and we probably won't know for many months. So fantastic day, no doubt. Let's enjoy it, but don't get overly confident here. We want to see some follow through over the next few days on this. So, let's enjoy this nice rally here. But again, don't get overly confident, and let's keep our fingers crossed that we can have a couple more positive days here in a row. If you would like to learn how simple market signals can help you become a more successful investor, trader, or financial advisor, you will want to watch the video introducing simple market signals, which is on my YouTube channel. I will also leave a link to that video in the description box below this video. Thank you for watching. Don't forget to subscribe, and please give me a thumbs up on this video, leave a comment, and I look forward to seeing you in the next video.